This is the ES2 Renko on 2/15/2012. I entered the first trade of the morning right around when the market opened. I'm using 24/5 data here. There was a fairly long squeeze. The swing cycle turned red, moved below the variable band here. Everything indicated a short trade. Everything was red down in through here, and so it was an obvious short trade to take. I stayed in the trade even with these two green up bars here because everything else stayed red except for one bar here on the dicks. I got out of the trade down here when it became oversold. Swing cycle moved above the variable band. The main reason I got out of the trade right here was the divergence in the RWO, and market moved down here, which was indicated right here. Then it moved up a bar, RWO moved up, and then it moved back down to this bar here, and the RWO did not move back down here, so it showed a very clear divergence here, and experience has shown when it shows a divergence like that, it's a good point to get out of the trade. So this was a 4-point trade to start off the morning. I took this screenshot a few minutes after I got out of that trade, and you can see how the swing cycle turned green and shot up here, indicating there was a pending uptrend coming. And just wanted to show how using the RWO got me out of this trade at the exact bottom of the move. Now here's my second trade of the morning. Right here is where I got out of the first trade, and it obviously was a good point to get out, a perfect point to get out actually, at the very bottom. So I once again, as I've done the last couple days, I drew in the Fibonacci retracements here from the top of this triangle down to the low point of the equity, and the swing cycle shot up here, turned green, so I got in this trade right here. Now, before I had developed the RWO, I would not have got in the trade here because the DMI differential was still red and was still well below its zero line here. But the RWO was moving above its zero line right in here. And so I have confidence in that indicator, and that's why I got in the trade when I did right here. Now also the Bollinger Band differential oscillator was still below its zero line, but it was moving up above the Bollinger Bands, and the mid Bollinger Band had turned, dashes had turned green right in here. So in any event, once again, the equity moved up to the 61 .80 area, which was 1351.50 on the scale. I got out of the trade at 1351.50. I put a self-stop right up in here and got stopped out. Now you can also see here that the trade was becoming overbought right in here as the variable band had moved way up here and was getting very close to the swing cycle right here. And things had kind of flattened out here, and the Bollinger Band differential oscillator had moved just barely above its zero line, but was flat right in here. So I thought this was a good point to just arbitrarily get out of the trade. I didn't expect on this particular move anything much above this ambush zone right here at 61.8. So this was a 2-point trade in here. So by 7:15, 45 minutes after the market opened for me, I had made 6 points and called it a day.